Right, so hello everyone, welcome to this live stream. It's the recap of Thursday the 11th of December trading day, and also what I'm looking at going into Friday the 12th of December. So obviously we are in this USDCAD trade, which I haven't done the breakdown for as of yet, but I'm going to do it now quickly. And also we had the live stream last night where we planned for this to the absolute T. We couldn't have prepared for this any better. So on the daily, we had this daily order block after touching the daily fair value gap. On the 4 hour, like I mentioned, we had this big 4 hour fair value gap that I wanted to see form, and it did, which is super nice. And like I mentioned in the stream last night, and then on the hourly we traded up into the 1 hour fair value gap. So even before looking for an entry, we can clearly see that we are bearish on USDCAD. We have high time frame key levels, and then if we switch over to DXY, we outline this new day opening gap as the level I want to see if price could retrace into. And as you can see, we retraced into it perfectly, literally like perfectly to the, we had one tap of it, and then that was the high of the day and absolutely melted. So going back to USDCAD, why I essentially took the trade, because some of you may say, oh, there's not a 1 hour stop run here, and that is correct. There isn't a 1 hour stop run. So this is, remember, this is the 4 hour fair value gap plus the 1 hour fair value gap. And then going into London session, move this over a second out of the way so we can explain. Yeah, going into London session, we had a stop run of this high here at 7:45 a.m. We then traded lower, and I entered obviously around here, so it was around this candle here I entered. The candle hadn't closed yet, but I had to be somewhere at 9 a.m. UK time, so that's why I entered, 5-10 minutes earlier than the candle closure. So we essentially had a stop run on the 15 minute, and I like how we literally closed above all of this range. That was essentially my thoughts. And if we also look on the hourly, what I wanted to see on the hourly closure was a close above these two candles. Red so you can see. So we had a 15-minute stop run, and 15 minutes stop runs are okay if we can clearly see we are in bearish order flow on the daily, hour, 4 hour. Like, this was clear we were in bearish order flow, because if we go back to the 1 hour, you can clearly see we've been in bearish order flow now since way up here, the 25th of November. Like, it's pretty obvious we are in a bearish market. So having 15-minute stop runs is allowed. I know it was during London, but I was happy to take this trade once we created the order block, because essentially it's a stop run on the 15-minute. We have an order block formed, and I was happy to take the risk of, okay, price could run higher, and if price would run higher, I was simply gonna take the loss and wait for a stop run, then a proper setup to form. That's literally all I was going to do. But like I mentioned, we had the 15-minute stop run, so this is a strong high during a kill zone. And I even mentioned yesterday we want to see London high of the day or New York high of the day. So we followed everything to the plan that we set out last night. So yeah, that's basically the trade breakdown. And then as you can see now, we have traded lower quite nicely. We are staying below this low, which is really, really nice to see. We made a 4-hour fair value gap and we haven't traded back into it. Ideally, I don't want to see us get back into this range, because if we look at the daily closure, if we can just have a little spike, then displace lower, hopefully hitting the daily rejection block at least, and then potentially even the lows I have outlined down here, that would be ideal. But obviously I'm not ruling out price can come back into this range if it wants to. We are at break even now, so there's no stress on the trade as such, and hopefully it can play out and we'll gain 6R with, we had a little bit of drawdown, but drawdown doesn't matter. It is what it is. You have your stop loss in a place for a reason. So does anyone have any questions about the breakdown of that trade? And then if not, we will go over the other pairs and what we seen today. Is there a reason the weekly order block didn't hold on USDCAD? Let me just have a look. You're about this order block here. Is that what you mean? Yeah, so this is where intermarket analysis comes into play. Yes, we have a weekly bullish order block, you are correct. But on DXY, if we are looking for bearishness from the new day opening gap or volume imbalance, whatever you want to call it, it wouldn't make sense for USD-CAD to be bullish as well. Does that make sense? So because of our intermarket analysis, we have bearish DXY, which essentially means bearish USD-CAD, bearish USD-JPY, and then bullish EU and bullish GU. That makes sense? So that is literally the only reason why I expected that order block to fail. But don't get me wrong, if you don't have intermarket analysis, you would think, oh, okay, price is just coming down into a discount and we're going to look to trade higher. But your first signs that this may not hold, look what we done last week. We displaced heavily to the downside and closed inside the order block. So that alone is your first sign, okay, we could be going lower here. We also closed below the weekly fair value gap. Combine that with obviously your DXY analysis, there you have 3 reasons why this order block wouldn't hold. If you didn't get a valid entry in London, was there a valid setup in New York you could have taken on USD-CAD? Yeah, so on USD-CAD, obviously if we had the same bias and whatnot, and New York session is the start here. So we just delete this for a second. You have an inverse fair value gap here. So if you wanted to be, say, more cautious and wait until New York to make sure this is the high of the day, you obviously have your 1 hour inverse fair value gap there. You could align that with your 15-minute fair value gap, which is here, like so. We do that as green just so you can see. And then you can have your stop loss here. And you may be thinking, oh, why can you have your stop loss here? This candle here, let's just delete this for a second and delete this. So you've had your stop run here. You had closure below these 3 candles, making this a order block. We then had an up close candle into the order block, creating a propulsion block. So you could enter off the inverse fair value gap / 15-minute fair value gap, stops above the propulsion block, and then you still aim for the target, which is still around a 5-hour trade. So this is a more conservative entry if you wanted to ensure that this was 100% high of the day. So that here is 2 ways you can enter a trade. You can either try and catch the reversal from the top like we did in London, or you can wait for New York and basically confirm that London has set the high of the day, because once you've made a propulsion block, you're disrespecting bullish PDRAs. Also on DXY at that time, you're disrespecting bullish PDRAs. You're obviously trading below the low here. Like, it just all aligns for bearishness. So that is another way how you could have entered USDCAD if you missed the trade during London. Does that make sense? Cheers. Why, when the draw on liquidity is clear like today and we're already in profit in the first position, why don't you use these safer entries to pyramid in? That's actually a good question. The reason I didn't is, obviously we are in drawdown, so I don't want to start trying to add loads of positions and just do too much. I'd rather just try and play it safe. And also, because the risk reward on this is quite high, I'm happy with just letting it play out this one position. Yes, we could have had another entry, but I could have lowered my stop loss to here and then obviously scaled in, but I just didn't want to. Basically, I didn't feel comfortable doing that personally. But you can, like, you guys can in the future. Like, if you see these setups when you're trading yourself, you can definitely scale in. Like, it's a very valid A+ setup. You have everything there. I just didn't want to personally. I just want to let this play out. All right, going over the gold trade that I took. I took this. I was going to send this out to you guys, but I didn't, because, like I just mentioned, we are in the drawdown still. So I don't want to try and do too much. But essentially, what I seen was, we went over this yesterday. We had the order block inside the daily fair value gap after the stop run of this week low here. We traded up higher, create the daily order block, and we had a good bullish daily closure yesterday. We created a 4-hour fair value gap, which I also mentioned yesterday in the stream. We then obviously traded down during London into the 1-hour fair value gap. We traded up higher and we traded lower again, and then during New York you can obviously use the 15-minute time frame. And what we had was, so New York started here 12. Yes, we had a stop run of this, but we didn't close above this set of bullish candles. So what I was looking at was, we had a stop run of this low inside the 4-hour fair value gap. We closed above the down close candle, and your trade literally could have been this. Stops either exactly on the low or just near the low. And yeah, obviously right now you could have had a 4.8 hour trade. If we look at, say you aim for previous week high, that is 3 hour. But like I mentioned to you guys, I didn't want to send out another trade simply because we're in drawdown and it's a lot of pressure. I'm not gonna lie, it's a lot of pressure. So I don't want to have too much pressure when trading, because as we all know, when you have even more added pressure than you need, it can cause deeper drawdown. So yeah, I did take this trade on my Darwin X account, but if you go back to the EU win we took the other week, this looked exactly the same. We had a bearish 4-hour fair value gap and a bearish propulsion block, I'm pretty sure. We had a 15-minute stop run. We waited for the order block to form, and we entered. So one thing you guys should be noticing now is every trade looks the same. The USDCAD trade today, exactly the same. 15-minute stop run inside the 4-hour fair value gap. We traded lower. We entered on the formation of the 1-hour order block, also understanding that we could potentially run higher again, but I was happy to take the risk because of what DXY was doing as well. So that is that. EU, there wasn't actually a trade for me personally on EU. Obviously, we outlined yesterday that this high here is the drawn liquidity. We did retrace into the 4-hour fair value gap and the 1-hour fair value gap. The only entry you could have had if you wanted to, I wasn't really looking at this, but obviously had a stop run of a low inside the 4-hour fair value gap, wait for a closure above the fair value gap for your change in order flow. You could have ended at 7 a.m. or 9:15. Say you entered here. We stopped below the low, because obviously it's a strong low. Then your target would have been the high, which is 5R. So that is another, obviously I wouldn't have traded this personally, but that is something you could have looked for. So that's played out absolutely amazing. So going into tomorrow now, what I sort of expect on EU is maybe a run of today's high, and then probably just consolidate to finalize the week. Because if we take a look at the economic calendar, we have nothing after 7 a.m. UK time pound news. If we go to pound, same sort of thing. Outlined this daily rejection block yesterday. As you can see, it's hit it to perfection. There was actually a setup on what's it called, GU, but because we're in USDCAD, I didn't bother. But we had the 4-hour fair value gap. We had a 1-hour stop run. So there could have been 2 entries you could have took on this. You could have entered after we created an order block here, like so, and your stops below the low, and then aim for the rejection block, which is there, 3.6R. Or you could have waited for a inverse of a key level, do green so it's clear. You could have entered on the closure above it at 11 a.m. You could have your stop loss just near the low, and then you could have aimed up higher. So today was actually a great trading day. We had a lot of setups across the board on multiple pairs, gold, obviously USDCAD and GU. We had 3 very good A+ setups that we all could have taken. Obviously we're in USDCAD, and I would say we've picked quite a good one with USDCAD as well. So right now we are currently running 2.82R. We have 45 pips to go tomorrow, which is more than possible, especially if we get through Asia, just a push going into London, take out the lows, and then maybe just retrace and cap off the day. Well, the weekly range, that would be ideal. But looking at DXY for tomorrow, we still do have this low intact, so there is a nice possibility that, yes, we've had a big sell-off today. We could just have one more push down into that low, and then potentially just retrace to end off the week, because we've had quite a big week on DXY. So that is my plan for tomorrow, because this is such a normal retracement to have. We've just melted 1, 2, 3, 4, 5, 6, 7, 8, 9. We've had 10 hours of we've just sold off on DXY. So having a retracement is normal. We've took out a flat open now, so this could easily just roll over here and take out that final objective, because this isn't a big move now going into tomorrow. And obviously if that falls off tomorrow and takes out the low, our USD CAD trade should at least get to the daily rejection block, and the daily rejection block is 4.85R, because as you can see, we've not had as much retracement on USD CAD than we have DXY. So that is the plan go for tomorrow. Do not look for continuation trades on GU or EU. Just do not do it. I'm asking you all, do not look for continuations on EU and GU. we've took out a weekly objective. We've had big expansion and we've come to rejection block. USD/JPY, as you can see, I told you guys yesterday this wasn't that interesting because of the relative strength on it, so that's played out nicely. USD/CAD still does have weekly objectives intact, so that's why I did choose this pair, because it had a clear drawn liquidity for me. Obviously USD/CHF don't really trade it anyway, but me personally, we've melted since Tuesday, so we've had 2 big expansion days, so I just avoid that now. And yeah, that's basically the daily outlook going into tomorrow. So we've covered the breakdown of this trade, covered other trades you guys could have all took, and yeah, that's sort of it. Let's see if we have any questions. So I've been over the gold setup. Had it struck all from my list of low prob, but it makes sense. Cheers. Also, you seem to target big drawn liquidities for 4 to 6 hours instead of going for previous day low, etc. No partials. Would it be smart to take some profits at 2 hours, for example, and let the rest run? Me personally, I prefer to just hold the full position, and I don't know if that's because my psychology is quite good, but some people get to 2 hours and take partials religiously, but me personally, that doesn't work for me, because my average risk to rewards, I think it's around 2.9 hour. So I'm happy holding trades a bit longer, even if they do take a day or 2 to play out. I'd rather hold the trade and get the full 6 hour than take partials. So that's just me and how I trade and what works for me. But it could work for you that you taking partials at 2 hour relieves so much stress on your psychology that it helps you in the long run. So that's something that you guys need to figure out for yourself. But for me personally, I don't like to take partials at 2 hour or whatever. I'd rather aim for a bit bigger risk reward and hold the full position and maybe get the odd break even or the odd it just doesn't work than take partials. But that is just me personally. We were looking for a move tomorrow, or would you class today as a TGIF? I wouldn't class today as a TGIF because we still do have a basically drawn liquidity intact on DXY. I know we have obviously taken this drawn liquidity, but now I would expect this to get taken out tomorrow. Obviously it doesn't have to, it could just retrace here. And if it does retrace here, that's even better for us, because that means next week we can look for DXY lower into this low here. So yeah, I wouldn't class this as a TGIF because the TGIF normally occurs within a session as well. And as you can see, this is just more of a end of day retracement because we've had hot open, high, low, close. It's more of just like a basic candle formation than more of a TGIF to me personally. But if no one has any other questions, that is the daily outlook done. I think it's quite a good day for us trading, good week for us trading really, no losses. We had 1 break even and 1 potential winner going into tomorrow. So yeah, super good trading. I think this is only our 4th trade of the month anyway. So far the trading less and waiting for better quality setups later on in the week seems to be working so far. It's definitely less stressful. But yeah, apart from that, if you guys don't have any other questions, I will end this here and we will speak tomorrow. Obviously the weekly review stream at, is it 7 p.m? No, 7 p.m. UK time, I think. So make sure you're all here for that. Have any questions and we'll go over everything. And until then, I will speak to you all tomorrow. So yeah, thank you. Yeah, I agree. The daily streams are good. Like today was so easy because we planned last night. So yeah, I'm glad you guys are liking it. But yeah, I'll speak to you all tomorrow. Have a good evening, and yeah, thank you.